Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see on the intraday performance on the gold that market in general showing nice response to all fib levels, support levels on intraday charts, but this reaction is not quite enough for reestablishing of the upper direction. So market just trading them with some healthy bounce, but later losing the upside momentum and drop to the next level. And in general, this is based on the recent news that we have mentioned in the Telegram that Jerome Powell said that currently the Fed doesn't see the good actually effect on efforts on inflation fight, and that was sounding like a bit more hawkish comments from the Fed. Geopolitical tensions on the Middle East come down a bit as Israel has postponed to respond to Iran for some indefinite term. So that brought some relax on the markets across the board. So we can see that the dollar is moving a bit lower, 10-year bonds moving lower, I mean in terms of the yield is dropping a bit. As gold market also is getting some relief. Despite this performance and despite that we yesterday got this downside candle, formally trend has turned bearish on the daily chart, but we have the bullish directional pattern, and by the Napoli approach, direction overrules trend. So we have the bullish context based on this pattern. It will be valid until market stands above its lows, but we need to consider a few patterns that might be formed just to identify the potential downside action that could happen on the gold, which will not break the overall bullish context. So on the 4-time frame chart, take a look what we have. Market still stands great above the trend line. So here's some kind of the dynamic pressure we could identify because trend stands bearish, while price is forming the high lows. Another divergence is forming here, but at the same time we have this ABCD pattern. The OP stands below its lows, and we're not interested with that, just because if market will reach the OP, the grabber on the daily chart will be erased and the bullish context will be destroyed. But market could just limit downside action with the COP, which is 2332, and it stands above its lows. So market theoretically could complete as the target, as could keep valid the daily grabber. This is the potential scenario that we need to keep in mind, especially if you intend to take the long position. Because few recent attempts to take the long position was not really bad. As you could see on the hourly chart, this pullbacks happens every time. So first one, this was right there. Yesterday it was pullback from the confidence area that we discussed. Now with this downward action, ABC top market has completed XOP around 2352, creating an agreement showing another great pullback here. So this was healthy trading process here in the gold market, but at the same time with this recent performance, you could see that market has formed bearish reversal swing. So we've got deeper downside action, which is actually greater than the previous upward action. And this potentially creates the background, which could mean that we could get second leg of this action. And if you calculate here, it's the ABCD pattern. We're coming to the same area, 2336, with this ABCD, while the COP on the 4-time frame chart 2332. It's just $4 different between them, so mostly they stand in the same area. That's why this level should not surprise you if you will see that gold is dropping right back down. It means that 2332, 2336, and an area that we need to keep an eye on closely. That is potentially also interesting area for conservative traders, because if you'd like to take the long position, you could not find better area to step in, just because it will be minimum potential loss, because you will have to place stop just below this area, and you can see the distance to the stop will be very small. Also, it will be kind of the gorgeous triple to Y pattern, suggesting that taking position here looks relatively safe, just because at least minor pullback here has good chances to happen, something in the same manner. So once we have taken position, pullback is starting, we're moving stops to the break even. Here's as well, here's as well. So, and next area that market could reach stands right here. But at the same time, in the current situation, it's not really fact and it's 100% assurance that market definitely will reach it. So this is just a suggestion, and as one of the possible scenarios that you need to keep in mind, is the most important for risk management, and maybe it will be useful and handy for those who intend to take the long position. But at the same time, you could combine different approaches. For instance, if you would like to be possessed and you're not sure that market will reach this level, you could split your position. I always told about this, that splitting of the position, it's very conservative, but very careful, very comfortable tool. Yes, you do not get the perfect entry, but average entry in most cases gives better result than trying to catch some predefined reversal point. This is just by the probability approach. So you're buying at some so-called mean level while trying to catch the extreme point of the reversal. So that's just the one moment that I would like to share with you. I think that it's important and might be vital for the whole trading process of this daily grabber pattern.